This is Angela Bowles, and this is my Accounting Ethics Individual Project. The subject of this presentation will be Scott M. Dittman, CPA. A brief disclaimer. The purpose of this presentation is to observe the public filings surrounding and relating to an individual CPA that has been sanctioned by the Securities and Exchange Commission or another state board of accountancy. Using public filings, we are trying to get a better understanding as to why the person in question did what they did, so that we can avoid similar pitfalls as we start our careers in public accounting. The presentation will also include assumptions so that we can get a better understanding as to why the individual did what they did. Again, the topic of this presentation is Scott M. Dittman, CPA. He was 50 years old at the time of this incident. He got his CPA license in California in 1995, and after a 2-year period, it expired in 1997, and then after 5 more years of him failing to renew, it was canceled in 2002. So some background on Scott Dittman. There was very little defined online about him other than this case. So a lot of the information that I gathered came from an interview that I found on YouTube with a channel called Can Economy. So this all came from Scott Dittman himself. Unfortunately, I'm not sure if he's a reliable source of information, but this is what he said, and this is what I will be sharing. So he attended the University of Colorado, where he double majored in accounting and finance. He said that he went into accounting because he thought that it was the best way to get into the marijuana industry. After college, he worked at Arthur Andersen in San Francisco and Sydney, Australia, where he worked in audit, enterprise, and process consulting. He left Arthur Andersen in 1995 and got into real estate, where he moved to Colorado, bought a commercial construction business, and was successful in that business for about 14 years until the housing market crashed in 2008. So this is more relevant to the case that I will be discussing, but after his real estate company failed, he he took over an existing company and changed its name to Fusion Farm, and their main product was farm pods, which were described as plug and grow recycled shipping containers that were refurbished for the purpose of do-it-yourself at home growing medical marijuana. Scott Dittman served as the CEO, president, and sole director of the company. However, his brother-in-law, William Sears, was an undisclosed de facto officer and control person who will become relevant to this case. The company was initially investigated in 2016 under suspicion that it was growing and selling cannabis and booking those sales as its revenue for their farm pods products. That's not what was discovered, though. What was discovered was that from approximately April 2011 to May 2014, the company, through its CEO, Scott Dittman, and its undisclosed partner, William Sears, engaged in approximately $12.2 million of a fraud scheme that was in violation of the registration and anti-fraud provisions of the federal securities law. So basically, the company backdated convertible shares and preferred stock, and they transferred those shares to 3 companies, and those 3 companies happened to be controlled by William Sears, and Sears was able to sell those shares, and the profit that he gained in those sales they funneled back into the company, and they documented those as revenue on their financial statements. So basically, Scott Dittman's brother-in-law was an undisclosed partner, and Sears had prior convictions of conspiracy to commit securities fraud and commercial bribery. He was sentenced in 2007 to, I believe, 3 years in prison, And then after that, he got into business with Scott Dittman. Sears was, again, controller directly or indirectly of all three of the entities that the stock was transferred to. And the stock was the company stock of Fusion Farm, trademarker FSPM, was never registered as an offering of securities under the Securities Act or as a class of securities under the Exchange Act. So which laws were violated? Sections 5A, 5C, and 17A of the Securities Act and Section 10B of the Exchange Act and Rule 10b-5 thereunder. All four of those violations were individually violated by Scott Dittman, and because of his position and control over the company, Scott Dittman aided and abetted the company to violate those rules as well. I'm going to go over what those violations were. Section 5A seeks to promote mandatory disclosures by requiring registration statements and to ensure potential investors only have access to information that the SEC approves of. Section 5C, during the pre-filing period, prohibits the issuer from making any offer to sell those securities. Section 17A means that every member, broker, or dealer must preserve for a period of not less than 6 years, the first 2 years in an easily accessible place, all records to be made. So document the transactions and keep those documents. Section 10b-5 covers instances of insider trading wherein an insider or executive uses non-public information to influence share prices to their benefit. So to summarize, the FSPM stock was never attempted to be or never actually registered with the SEC, so it never should have been traded in the first place. The appropriate records of the transactions were not kept and not kept easily accessible for investigators to find. And Dittman's brother-in-law, who was a undisclosed partner of this company, was privy to insider information and should not have been allowed to trade stock. The punishment for Scott Dittman by the SEC was that he was barred from participating in any offering of a penny stock, including acting as a promoter, finder, consultant, agent, or other person who engages in activities with a broker, dealer, or issuer for purposes of issuance or trading in any penny stock, or inducing or attempting to induce the purchase or sale of any penny stock. He was also prohibited from acting as an officer or director of any issuer that has a class of securities, and he was denied the privilege of appearing or practicing before the commission as an accountant. So after 2002, he never attempted to renew his CPA license, but after this case, he will never be able to again. He also faced criminal punishment. So in the case of the United States versus William Sears and Scott Matthew Dittman, Dittman pled guilty to conspiracy to commit violations of Section 5A of the Securities Act, violations of Section 10B of the Exchange Act, and Rule 10b-5 thereunder, in addition to wire fraud and mail fraud. He was sentenced to 60 months of imprisonment and ordered to forfeit $921,094.29 to the United States and ordered to pay a money judgment in the amount of $1,160,160.81. So after that, where is he now? He was sentenced to 5 years of prison with an additional 3 years of supervised release after incarceration. The Federal Bureau of Prisons indicates that after September 23rd of 2022, he was no longer in custody. He was sentenced in 2020. So this shows that he only served about 2 years of his sentence. I tried to find any state prison records or state jail records, seeing if he could have been transferred anywhere else. I was not able to find anything. That doesn't mean he wasn't transferred, but there's little information about him after this case. So I'm not sure where he is now. If he didn't serve his full time, then I'm not sure if he would be required to serve the 3 years of supervised release. I'm not super knowledgeable on the legal system in that regard. Um, so there's also not much about him online, period. But I scoured social media and anything that I could find. I'm not sure what he's doing now, but I know that it's not accounting. My personal thoughts as to why he may have done this. I think after his very successful real estate and custom home building company failed in 2008 after 14 successful years, he probably wanted to start a new successful business. And we know that he always wanted to get into the marijuana industry. So that was his idea for his product that he was selling, and he got into business with his brother-in-law, William Sears, who had a reputation and prior convictions. And I think that Dittman was likely um, exposed to the less than legal side of how that could be done to expedite the company's growth. And I think he kind of fell into the trap of, well, I could get away with this, and he clearly didn't. So Dittman was a trained accountant. He got his CPA license at some point back in 1995. The rules haven't changed that much. It's still illegal to facilitate insider trading. So he should have known better than to try to get away with this, and he obviously didn't, and he at least served some prison time for it and will never be able to practice as an accountant again. So let that be a lesson for you, I guess. Again, this was my presentation for accounting ethics on Scott M. Dittman, CPA. Thank you for watching.